Hey everyone, welcome back to Corporate Decoder, where we dive deep into the hidden stories behind corporate filings. And let me tell you, this latest report from T. Rowe Price Retirement Funds Incorporated is quite the treasure trove of financial goodies. We are going to see how their Retirement 2005 fund is doing and what these numbers really mean for investors. And if you are all about understanding these complicated financial documents without the jargon, make sure you stick around. Also, before we jump in and start decoding this report, if you find value in these deep dives, please hit that subscribe button. For those of you who love to connect and chat about these filings, our Discord community is linked in the description below. Alright, so what we have here is a filing with the US Securities and Exchange Commission, or the SEC specifically. It is a certified shareholder report. Think of it as a snapshot of how the T. Rowe Price Retirement 2005 Fund, which is a type of investment fund where many people pool their money to invest together, has been performing. This report covers the period up to the 30th of November 2025. Now let's get straight to the juicy parts. When you invest in a fund like this, there are costs involved, and it is always smart to know what you are paying. For a hypothetical $10,000 investment in the investor class of the Retirement 2005 Fund, the costs for the last 6 months were about $25. That works out to 0.49% of your investment. For the advisor class, those costs are a bit higher at $38 or 0.74%. The R class saw costs of $51, which is 0.99%, and the I class, which is typically for larger investments, had the lowest costs at $18 or 0.34%. So you can see how even within the same fund, different share classes can have different cost structures. Generally, the more you invest, the lower the percentage cost. Let's look at the size of this fund. The total net assets were reported at $1,217,167,000. That's over $1.2 billion. That's a pretty substantial amount of money being managed. And the number of portfolio holdings, meaning the number of different investments the fund holds, is 27. The portfolio turnover rate here is 8.3%. This tells us how often the fund manager buys and sells investments within the fund. A lower turnover rate generally means the manager is taking a more buy and hold approach, which can sometimes lead to lower transaction costs and potentially better long-term performance, as they are not trading in and out of positions too frequently. Now, what is this fund actually invested in? The asset allocation gives us a clear picture. They have about 40.5% in domestic bond funds, meaning bonds issued by companies or governments within the US. Then 30% is in domestic equity funds, which are stocks of US companies. International bond funds make up 14.8%, and international equity funds account for 11%. Finally, 3.7% is in short-term and other investments. This breakdown shows a balanced approach with a significant portion in bonds, possibly to provide stability, and a good chunk in stocks for growth potential. Let's dive into the top 10 holdings. This is where the real action is. The largest holding by far is the T. Rowe Price Limited Duration Inflation Focused Bond Fund at 17.7%. Following that, the T. Rowe Price New Income Fund is at 16.5%. These two bond funds alone make up over a third of the entire fund's assets. Then we see a mix of other T. Rowe Price funds like the International Bond Fund USD hedged at 6.2%, and several equity funds such as the Value Fund and Growth Stock Fund, both at 5.9%. This shows that the Retirement 2005 Fund is essentially an investment in other T. Rowe Price funds, a strategy known as a fund of funds. Looking at the financial statements themselves, we see the statement of assets and liabilities. The total assets we mentioned earlier, $1,217,167,000, are broken down here. Liabilities are relatively small, around $870,000, which is good. This means most of the fund's value is actual assets. This section, net asset value per share, is crucial for investors. It tells you the value of a single share of the fund. For the investor class, it is $13.28. The advisor class is at $13.19. The R class is $13.28. And the I class is $13.29. These slight differences are due to the different fee structures we discussed earlier. Even small differences in net asset value can add up significantly over time for investors. In the statement of operations, we see the net investment income. For the 6 months ending the 30th of November 2025, this was $19,112,000. This is the income generated from the fund's investments after accounting for expenses. The expenses themselves, which include investment management and administrative fees, along with Rule 12b -1 fees for the advisor and R classes, totaled $2,609,000. More exciting are the realized and unrealized gains and losses. The fund reported a net realized gain of $10,647,000, which comes from selling investments that have increased in value, and also from capital gain distributions from the underlying funds they hold. On top of that, There is a substantial change in net unrealized gain of $56,220,000. This means the value of their current holdings that haven't been sold yet has increased by that amount. Combined, this led to an increase in net assets from operations of $85,979,000 for this 6-month period. Diving into the portfolio of investments, we see the detailed breakdown of what the fund manager has chosen. The top holdings are indeed those T. Rowe Price bond funds, the limited duration inflation focused bond fund, and the new income fund, representing a significant portion of the portfolio. Most of these investments are in other T. Rowe Price funds, which are considered affiliated companies. This structure is relatively common and can provide cost efficiencies. For example, the T. Rowe Price Limited Duration Inflation Focused Bond Fund has a market value of over $214 million. The New Income Fund is valued at over $200 million. This section, Affiliated Companies, is where they detail transactions with related entities. As we saw, much of the fund's investments are in other T. Rowe Price funds. The report shows the net realized gain or loss, unrealized gain or loss, and investment income from these affiliated holdings. For instance, the T. Rowe Price New Income Fund contributed $1,251,000 in investment income and had a net realized loss of $109,000, also showing a decrease in unrealized gain of $1,259,000. This section helps us understand the flow of money and performance within the T. Rowe Price family of funds. Now, before we wrap up the deep dive, let's touch on a few key points from the notes to financial statements. The fund operates as a diversified open-end management investment company and invests in other T. Rowe Price stock and bond funds. These underlying funds are its primary holdings. The strategy is to seek the highest total return over time with an emphasis on both capital growth and income. The fund's allocation among these underlying funds will shift, and its asset mix is designed to become more conservative over time, which is typical for a retirement-focused fund aiming for a specific target year like 2005. The fund also had $1,027,000 of net gain on $4,475,000 of in-kind redemptions during the 6-month period. In-kind redemptions happen when the fund pays out redemptions using shares of other funds instead of cash. Looking at the tax implications, the cost of investments for federal income tax purposes was about $1,098,336,000. The net unrealized gain aggregated $119,272,000. This means that currently the investments held by the fund are worth more than what they were bought for. This is a positive sign for the fund's performance. So, what is the big picture here? The T. Rowe Price Retirement 2005 Fund is a large, well-established fund that primarily invests in other T. Rowe Price managed funds. Its asset allocation shows a balanced approach leaning slightly towards fixed income for stability, which is a sensible strategy for a retirement fund. The costs are relatively low, especially for the investor and I classes, which is a big plus for long-term investors. The fund has generated positive returns, both from realized gains and from the increase in value of its current holdings. A notable aspect is the fund of funds structure. This can offer convenience and potentially cost savings due to economies of scale within T. Rowe Price. However, it also means that the fund's performance is directly tied to the performance of these underlying funds. Investors are essentially betting on T. Rowe Price's ability to select and manage these underlying funds effectively. The significant portion allocated to inflation, focused and new income bond funds suggests a cautious approach, while still aiming for growth through equity investments. The current net asset value pairs healthy across all classes, indicating solid performance for the reporting period. The report details a good increase in net assets from operations, driven by both investment income and, more significantly, by capital gains, both realized and unrealized. This suggests that the fund manager has been successful in navigating the market during this period. The substantial unrealized gains are a good indicator of potential future gains if those investments are eventually sold. The main risk, as with any fund of funds, lies in the performance of the underlying funds. If those funds underperform, this Retirement 2005 fund will too. However, T. Rowe Price is a reputable manager, and the reporting shows a diversified approach within their own offerings, mitigating some of that risk. In conclusion, this report paints a positive picture for the Retirement 2005 fund for the period ending November 2025. It is a well-managed fund with a clear strategy, reasonable costs, and demonstrated positive returns. For investors in this fund, it appears to be on solid ground, reflecting a balance between stability and growth. Alright, that is our breakdown of this T. Rowe Price Retirement Fund's filing. What are your thoughts on this fund of funds strategy and the performance numbers we've seen? Drop your insights in the comments below. If you found this analysis valuable, please give it a big thumbs up and remember to subscribe for more regular dives into corporate finance. And for those of you who want to connect with other finance enthusiasts and discuss these filings, join our Discord community linked in the description. Thanks for watching, and we'll see you in the next video.